Hello, Jim Adams here from Easy Investing Income YouTube channel. Today I want to share with you 5 stocks that are really good for selling put options on. But before we jump into those stocks, I do want to talk a little bit about how I choose my stocks and how I actually sell put options. So initially what I like to do is find good value companies, ones that pay dividends. I'm a long-term value investor. And what I'd like to get is around 10% below what they're currently trading at. And this is assuming that they're trading at a good value. Now, if they're really expensive and they're 40, 50 PE ratio, then that's not something I'll look at. Most of the stocks I look at have sub 30 PE ratios, but have good growth potential, but then also pay dividends. I also look at trying to sell the options, the put options at around a 20 delta. Sometimes that'll be a little higher, a little less. All depends on what the strike prices are and where those deltas actually show up. And then I typically do it where it's a cash secured put, and then if I'm able to, I'll buy the outer arm if it's inexpensive. But I've been able to earn really good income doing this. If you look at my last month video in December, I did 2,800 for the month selling options, and I did another around 2,900 with dividends. Now December is typically a really high month, but I've been able to average between 2 and 3,000 a month, and my goal for this year is definitely to do 2,500, and by the end of the year be closer to 3,000. I also try to manage them. I've got what I call my planning worksheet that I put out every Monday, and I go through and I look at what's expiring or what might have ex dividend dates to be sure I'm not going to be caught by surprise and something will be assigned when I'm not paying attention. And then that being said, let's go ahead and jump into the spreadsheet. Well, or not spreadsheet. Actually, I'm going to go into my Schwab account and I'm going to use a new watch list that I set up that contains the stocks that I'm looking at currently. So let's go ahead and jump into that. Thank you for joining me today. Okay, I've logged into Schwab and I've brought up the research page. Now, what's important on this page is right here to the right, this view watch list. Now, if we click on that, you can actually work with it here, but I prefer to click on the link here, which is view full watch list. So this is a new watch list that I've set up primarily for this video. And these are the main companies that I'm interested in selling puts on in the coming month. Some of these I've actually sold some options recently on. Now, all of these are not that expensive. I think they're all under $60. Lumen Technologies is the least expensive at $12.33, so it could be traded in a very small account. All of these have good value. They're got good earnings, good PE ratios. They pay dividends. So they're typically value companies. There's not a huge amount of risk for them, going forward. There's some risk. There's always risk, but compared to some of the volatile companies like Amazon and the big tech names and Arc Innovative and some of those, you're taking a lot less risk with these, and you can earn fairly good premium. I've done quite well with selling puts on these. So let's go over them real quick. I'm not going to go into a whole lot of depth. I may choose one depending on where it stands, so I can just show you what it looks like, option wise, what kind of premium you can actually get. But let's start with the first one, which is Cisco. And let's actually go and do a little bit of research with Cisco. I'm actually going to lower this a little bit so I can go back. So Cisco is actually has an A Schwab equity rating, which is really good. Its range isn't outrageous. This is the 1 year, so the low was last March. So it's not on a crazy trading range. It's not gone through the roof and come majorly down. It did get as high as what is that, 64, and now it's come back down to 58. So I would shoot for probably getting it around 55 or a little bit lower. Again, using the 10% rule that I mentioned at the beginning of this video, I would look at trying to get it around 52, 53, or even 50, depending if, there's not a whole lot of risk to pick it up at 50. Even if it went way down, I could probably roll it down to 45. So you can see the PE looks good. Quarterly dividend, not bad. It pays 2.5%. So if I picked it up at 50 or 52.50, something along those lines, it would be paying fairly close to a 3% dividend. And with dividend increases, it may very well be a 3% within a year or so. Let's look at earnings. Earnings look good. They haven't gone up as much recently, but they've all been positive. Um, and that's with supply chain issues. And I feel like they're getting ready to kind of break out and really start making some good profit. Back here, you can see they did even better, and that was back in 2020. So their earnings look good. That's what is that, quarterly? Let's look at it annually. So you can see a increase each year. So what, 6 or so percent? This is what, well, this is tiny, 0.3% to 6.3%. So not bad earnings wise. If we look at dividends, you can see it's been increasing dividends year after year after year. If you bought this back in 2014, you'd have 74 cents in dividends. Now you're over $1.47, so literally almost doubled it. And I think they'll increase. They've only increased at 3 or 4% in the last 2 years, but the last 2 years have been a little bit trying. I think when they start breaking out on the upside, they'll probably increase dividends a lot quicker. So that's Cisco. And yeah, I've sold a lot of Cisco. I've sold a lot of puts and done quite well with it, actually, to the point where I probably have sold 10 or 12 contracts on Cisco, and they've all expired. Mainly because it's fairly easy to trade. It doesn't go through the roof, and it doesn't do huge declines. So Cisco is the first one that I'm looking at, and let's go on down to, well, let's go back one more or two more. Okay, so the next one is Intel, and just like Cisco, again, it pays a really good dividend. This, I do own a fair number of shares in Intel. I think 300 shares, and I do sell covered calls as well as puts, but I'm always looking to pick up some more. Um, it's it's a very valuable company. It's not outrageously priced. You can see the 52 week. It's actually kind of right in the middle, maybe more on the low side. The dividend is 2.59. Earnings have been fairly consistent. Let's actually jump into earnings. So you can see it took a slight downturn, and it too is going through some supply chain issues, which I think they're actually building some plants, and I think things could potentially turn around on the upside quite a bit for Intel. So, and you can see with dividends, they've also, I believe, increased dividends pretty regularly. Yeah, almost looks like Cisco, a very similar scenario, but they've been doing 5% consistently since 2018, so they most likely will do another 5%. So if you bought this in 2014, you'd be getting $1.39. So if you can, if I could pick it up at, um, let's say it's at 53, 54. If I could pick it at 49 or 48, which would be right around this range, it's good quality stock. And again, I've been able to sell quite a few puts on it and quite a few cover calls. So this is one of those scenarios you might want to take a little more risk and take, instead of a 20 delta, go with a 30 delta, especially if you're looking to own it. Um, so Delta, not Delta, Intel is the second one, and it's, like I said, a really good stock to work with. So let's go on back to the list. Sorry for the back. I could probably just click on it again. Now, next one is Franklin Resources, and let's go ahead and open that up. And you can see it's really reasonable, $33. So you can, it's not too difficult to sell this in, or to sell puts on this in a small account. and it's not nowhere near the high. So the high was 38, and now it's, what is it, 34. So it's a little bit higher than the mean. So for this one, if I could get it at 30, then that would be pretty good. You can see 30 right here. You wouldn't have a whole lot of down, you know, chance of it going way down. If it jumped down to 27.50, you could probably roll it without any issues. And just like the others, let's actually look at where the PE ratio. So the PE ratio is outrageously small, 9. It pays a 3.43 dividend. So if you picked it up, at that 10% off, which would be around 30, this would probably be closer to 3.7 or something like that. So a really good dividend. And let's look at earnings. I believe the earnings have been fairly good. They did have a slight downward trend in the last earnings. Let's look at it quarterly. But you can see here it went way up, and I think the last one was they disappointed a little bit, not here, but maybe over here. There's been some kind of news that they've come down a little bit, but pretty good earnings, and it's a good company. It's an aristocrat. Good. They make good products, good financial products. Let's look at dividends, and again, pretty consistent dividends. I think this potentially was a distribution, so you don't really count that as much as a dividend. So fairly consistent, 3.43%, and in the value of it only being $33 makes it, a good option for actually selling options. Now, I believe I sold some of these, and we can look at my spreadsheet if we have enough time, and I believe I sold a couple of contracts. Now for me, I usually sell 3 contracts when it's only priced at $33, or I just do it as a cash secured put. So let's look at the next one is Fidelity. Now I love Fidelity. I actually have a 401k in Fidelity and an HSA. I like what they do. I think they're not outrageously expensive. I also like Schwab, but Schwab's a lot more expensive than Fidelity. So you can see it's not trading at a crazy level. It's at 52, and I think the high is what, 50? Is that 58, 56, and the low is 35. So for this one, I would probably look to try to get it at around 47.50 or 47, which would be right around here. So it would be a fairly good level, kind of where this line is, or a little bit below it. If we look at PE, again, PE is relatively low. Let's look at earnings. Now look, yeah, these earnings look really good. I mean, you can see they really, let's turn this back to annual. Yeah, so I mean, you can see the earnings. It's going up quite a bit. It's one of the companies I just really like. They do a nice job, just like Schwab. Every time I've had to call them directly, it's always been an easy situation, or it's been easy to get someone on the phone and easy to figure out how to do something in my Fidelity accounts. Actually, moving money around and stuff like that has not been that difficult. And then I think I looked at dividends. I'm not sure if I did. And yeah, they've been increasing them, but you can see here, what is that, 10%? Actually, I think it's more than 10%, 18%, 7.5. So back 2014 it was 73 cents. Now it's what, $1.56. So again, more than doubling your dividends. So if you bought that now, you could potentially be doubling your dividends in 10 years or so. And I did sell some puts on it and did quite well earlier in the month. Actually, instead of doing back, let's go back this way. Yeah, there it goes. That's a little easier. Next one is Walgreens, and it's another good company. Its earnings may not be as unbelievable as Fidelity's was, but it has come up quite a bit lately. But it's still, if you look back, it was trading in the high 50s nearly a year ago, I think if you go 5 years out, yeah, it's not that high considering what it was a couple of years ago. Um, and it's at a fairly good price, so it's not outrageous. The PE's not outrageous, 7.78. I think earnings have been good. I don't know that they've been great. Let's look at earnings real quick. Yeah, they've been increasing. So they increased the last 2 years quite a bit from 20 to 21, and then a smaller increase to 22. We can look quarterly and see what the latest is. So this must be the latest. So it was almost 26 higher, 26% higher than what the estimate was, the earnings per share estimate. So good. Let's look at dividends, and increasing every year, 2 to 3% recently, 7% before COVID hit. So good amount of dividends here. Again, $1.89 currently. If you owned it back in 2014, $1.31. So you can see why I'm a dividend investor, and I've been a dividend investor longer than I've been an options investor, because it's truly, you know, passive. And especially if you pick these good value companies, don't ever lower the dividends typically. Let's go back to summary, because I believe their dividend may be over 4% currently. So let's come down here, 3.57. So if you get it, so this one I would look at 47, 48, which again would be down here, and again that would be probably over a 4% dividend if I picked it up or the shares were assigned. So that's Walgreens, and it's another really good company. Let's jump into the next one. Let's look at, last one is Lumen Technologies. Now this one is really priced nice, and you may think I'm a little crazy because um, when you first look at it, you don't realize how good it looks. Now it's been in a very small range, between, what is it, 16 and, what is that, 10? And it's currently at 12. So if you can pick this up at 10 or 11, you're doing quite well. And you can actually do 2 or 3 contracts to pick up some pretty good premium. And I've sold quite a few put contracts on Lumen Technologies and done quite well. Its PE ratio is relatively low. It pays, now look at this, over an 8% dividend. Um, Now, what I really like about it is if you look at earnings, now their revenue is down from what it used to be, but they've done some restructuring, and their revenues are doing much better. Or not revenues, their income is doing much better. If you look at their revenues, it's probably down. Harder to see it here. Let's look at annual. So look at these profits, up 16, up 26. It's currently, for the year, thinking $1.93 for 2021. Now revenues have been down, but again with their restructuring, they're becoming more profitable, and their cash flow has been pretty good. Um, and dividends, they've kept them. They haven't increased them. Now that may change. They may start increasing them. So this is the exception where they haven't been steadily increasing them, and I think that's partially because they've left them at $1 every year recently, and I think they're using a lot of the money that they would have, if they had increased these, they would have, instead of using for dividends, they're doing some of this restructuring, so they may pick up the dividends. But again, at an 8% dividend, you can't do much better than that dividend in most places. Plus the fact that you can pick up some good options premium. um, it's and it's inexpensive, so you can trade this in most accounts. So if you've got a $10,000 account, I think I had a message from someone about a $10,000 account, you could definitely trade Lumen Technologies in your account, and you could sell puts on it fairly easily. So those are the 6. Let's go back and look at those 6 again. Let's see if any of them are down, and I can show you. Okay, so Cisco's down. Let's jump into Cisco. And let's look at options and I'll show you. So it's currently at 58. So again, if I can get it at 52, 53 or a little lower, then that's what I'm looking at. I'm going to move this a little bit just so I don't show my account. Hopefully it won't show it. I had it in the right place. So let's see. Typically what I like to do is I'm looking to make some income for February, so I'm not worried about January. Actually, let's unselect all. Let's just select February and see if I can get something in February um, that would expire by February and make some good money here. So you can actually see at 57.50, and I think I had said, what is it again? 58. So I don't want to get it at like 52, 53. So let's change this. Let's do a custom range. Let's do 45 to 55. All right. So here we see at the 55, it's $22. Not a whole lot of premium. Also, let's change this to Delta. So we'll change this to Greeks, which includes Delta. So you'll see I've got Delta, Gamma, Theta, Vega, and I can look. And I don't worry about the others. I primarily just look at Delta. I try to keep this as simple as possible. So here you're talking a 13 Delta, and again I like to use 20. And you'll see as we go farther out, this will increase. So here's a 16 Delta, 33. There's that 38. Yeah, 33 to 38 is the spread, and that's only, I think that's like 30 days. Well, here's 29 days. So again, at 55, I would rather do 52.50, but that's a 12 Delta versus 22 Delta. So I would consider 50, and at $71, I could definitely get this at $71, something to consider. And if I did two contracts, which I've typically done that, and some of the less expensive ones, I might do three. But let's go out and let's look a little bit farther. So this one we've got, again, it's a 23 Delta. This one's an 18 Delta. So I would probably for $1, for 55 versus 54, 74 cents, I would probably look at doing this one. And what you can do then is say select, and we'll come back up, and I'm going to switch this to puts. So if I wanted to actually trade this, then I could click on trade. Okay. And so now it's currently as a cash secured put. So I have to do sell to open, and then I'm doing only one. But if I did two, and then I set a market order, I could make $138 on Cisco, and it's expiring in about 30 days. So a fairly nice premium for selling a put on a really good stock, and so it's something I definitely would look at. I'm not going to do the trade currently. I will talk a little bit more about the trade. So that's the estimated amount that I could make was 138. Now if I did three contracts, let's see if it 207. So if I did three contracts, it would be 307. So what I would typically do here is, that's not bad, but I'd have to put up nearly 15,000 in or use 15,000 of margin, almost 16 or 16.5. So what I would look to do is I would do probably a vertical put, and remember that was at 55. So I would do 55 here, and then this would be the farther out. Now I don't want to go, I want to go lower, not higher. So if we look at 50, so it would cost me $22. So this would be $500 for each contract, which $47 isn't bad. One thing I still do, even though I'm looking at the outer arm, I still like to have enough that if I if I want to get assigned, I can. If I do too many contracts, then I can't afford. If I did 3 contracts of this, I can't really afford 15,000. You can see I've only got 20 available to trade 21,000. That would wipe out a lot of what I want to trade with. So I probably would still do 2 contracts, but I can actually look. Let's go to 45, and that's only 9 cents. So I would really consider doing that. Um, and then typically what I do is I do a market order. Now with Schwab, and it jumped back down to 1. So we'll see if I change those. I've got to come over here and do market order again. So 120, and it would only require $2,000. So 45 or 55 minus 45 is 10 times 100 is 1,000. So it would only require $1,000 of margin. So I wouldn't use much of that, or per contract, so 2,000 of margin. So I'd only use 2,000 of the 21,000 that I showed up here, that I have available to trade, and I could make literally $120, which isn't bad. Um, and I always do it as a market trade, which some of you guys may think I'm a little crazy, but this with Schwab, I'm always typically guaranteed to get this 120. But what they'll do is they'll do better if they can get a little bit more for you. And probably 50% of my trades, 40 to 50% of my trades, I get better. So I would initiate this trade. And then when I looked at the order status, I would see, well, I actually did 130 versus 120. But I do it as a market order because it happens right then. The order goes through, and I don't have to mess with it anymore. I can go on and go take my dog for a walk, go play tennis, go for a run, whatever I want to do the rest of the day. And this is where it really becomes passive. So that's it. Those are the 6 stocks. This is typically how I trade. I just wanted to share this with others. And that, what makes me different is if I can get not Costco, what am I saying? Cisco at this price, then I'd be perfectly happy to get it. So that's why I'm not doing 6, 7, 8, 9, 10. I've seen some people do like 10 contracts like this, and to me that's too risky because if I can get it and it's a good value, then I do want it to be assigned. So as always, I hope you enjoyed this video. Please subscribe. Please hit that like button. If you're interested in taking a look at my Patreon memberships, they're growing. I think we've got 5 guys that are meeting once a week. I'm looking to change the timing of the meeting. So please take a look at that. I'll have a link below if you want to take a look. I also have a blog where I have additional articles and information for you. If you want to learn more about how I trade and what I do, please take a look at that too. And as always, I hope you the best luck in the world with your investing, and have a wonderful day. Thanks for joining me.